Politics Show, today, Tuesday, August 11, 2020, as the political economic watch and conversation continues in Nigeria. Today, we'll be looking at the oil and gas industry, developments around it at the local and global level, and what you just need to know that is really happening and trending. As you all know, the oil and gas industry is one of the big industries driving activities in Nigeria, and here's the lineup that we have for you. The Department of Petroleum Resources and flag off the Nigerian Gas Transportation Network Code, the Nigerian National Petroleum Corporation resolution of the OML 130 issues, the Nigeria Content Development Management Board building that is set for commissioning this week, the analysis on the Nigerian petroleum industry, updates on Saudi Aramco operations, and U.S. oil services industry losing 9,000 jobs. And of course, the challenges and opportunities ahead for Nigeria's petroleum industry, and OPEC and the global oil demand. Those are all the things that we'll be discussing today as we look at the veritable petroleum industry. Let's begin with the Department of Petroleum Resources, the regulatory agencies in the oil and gas sector, that flagged off yesterday the Nigeria Gas Transportation Network Code. The event, which was virtual, had as special guest the Minister of State for Petroleum Resources, Mr. Timi Silva, and featured a webinar that discussed domestic gas utilization for optimal gas revolution in Nigeria. In his goodwill message at the event, the Group Managing Director of Nigeria National Petroleum Corporation, Mr. Mele Kolokiari, said NNPC is at the center of delivering gas to the domestic and export markets. He further stated that he sees this as an opportunity to widen the utilization of gas and ensuring that the federal government's objective of making gas a major source of income and development comes to reality through the Network Gas Transportation Code. Laudable initiative that will definitely take oil and gas industry to greater heights in Nigeria. We will be monitoring how that pans out in the industry. Let's move on to the Nigerian National Petroleum Corporation, which has addressed a very, very teething issue in the industry. In its bid to meet the target of revving up production to 3 million barrels per day and unlock gas revenues to the tune of about $225 million in the short term and $510 million in the long run for the Federation, the Nigerian National Petroleum Corporation recently reached an accord with its partners, China National Offshore Oil Company and South Atlantic Petroleum Company, to settle all outstanding issues surrounding the development of Oil Mining Lease 130, which has been the heart of contest. Speaking at the signing of the Head of Terms Agreement with the partners last week Thursday at the NNPC Towers, the Group Managing Director of NNPC, Malam Mele Kyari, said the deal was part of the corporation's dispute resolution and renewal strategy of 2017 aimed at securing out-of-court settlements of all disputes around the 1993 production sharing contracts and agreeing on terms for their renewal. Earlier, through a release by the Group General Manager, Public Affairs Division, Dr. Kenny Obateru, it explained that the dispute arose from recognition of certain cost and discordant interpretation of the fiscal terms of the production sharing contract by NNPC and contractor parties. Now, with the resolution and signing of the Head of Terms document, which sets out the terms agreed in principle between parties in the course of negotiations, apart from unlocking over $225 million of gas revenues, it will also enable settlement of renewal fees and create an environment conducive to further develop the OML 130 with associated benefits to the Federation. Speaking further on this, he said, "We are doing this with every other partner in the PSC dispute. We believe that we can close this engagement and conversation with all parties. The HOT, which clearly enables the position in terms of full settlement, will benefit the entire industry and all stakeholders." This is according to the Group Managing Director of NNPC, Malam Kyari. He commended CNOOC and Sapetro for their understanding while expressing delight that the HOT will facilitate the conclusion of all renewal issues. In his response, the Managing Director of CNOOC, Mr. C. Vincent Wensheng, said the agreement has opened a new chapter in his company's relationship with NNPC, stressing that it has provided a win-win situation for all parties. Also on his part, the MD of Sapetro, Mr. Toyin Adenuga, said the resolution was an important step towards further development of OML 130 and other new fields as the terms are now clearly spelled out. The execution of the HOT signals the resolution of a tax dispute that arose from a $2.3 billion acquisition of a 45% stake in OML 130 by CNNOCC from Sapetro in 2006. The OML 130 consists of Akpo and Egina fields, which have been producing since 2009 and 2018 respectively. It is operated by Total Upstream Nigeria Limited, which holds 24% stake, while Petrobras Oil and Gas and Sapetro holds 16 and 15% stakes respectively. And that is good news for Nigeria. With the resolution of 130 OML issues, definitely we're going to see more activities, clarity in operations, and productivity in that space. This week, Thursday, will be historic for Nigeria, as the Nigeria Content Development Management Board will witness official commissioning of its building complex, not in Abuja, not in Lagos, not even in Port Harcourt, but in Bayelsa, Yenagoa. President Muhammadu Buhari on 13th of August will perform the virtual commissioning of a 17-story headquarters building of the NCDMB. As you can see on the screen, it's a lovely building and it is in Bayelsa State. These are the kind of buildings you see in Lagos, in Abuja, and even sometimes in Kaduna and Port Harcourt, but this is happening in Bayelsa, showing once again how we can take development and infrastructure from oil-producing communities to the grassroots, to the way it's happening. And most of you know the history about states like Bayelsa when it has to do with oil production. So President Buhari will undertake a virtual tour in commissioning this very remarkable edifice, together with other accompanying facilities. It has a 1,000-seater capacity auditorium, 4-level car park, and 10 megawatts gas-fired independent power plant at Elebele. The power plant was constructed in partnership with the Nigeria Ajib Oil Company and will provide uninterrupted electricity to the NCDMB structures. The Nigerian Oil and Gas Park is being developed by the board at Emeya 1 in Bayelsa State and selects the structures in the states. Providing details on this event, Executive Secretary of NCDMB, Engineer Simbi Kesiye Wabote, explained that a part of the event will be held in Yenagoa, and the Minister of State for Petroleum Resources, Chief Timi Pre-Silva, will lead the Group Managing Director of the NNPC, Malam Mele Kolokiari, alongside the Governor of Bayelsa State, Senator Doye Diri, to participate in the event on site. Wonderful, and kudos to NCDMB for completing their headquarters building. They will definitely deepen their operations and improve the Nigerian oil and gas industry. Let's quickly look at some updates on the oil and gas industry and how it ties into Nigeria's economy from the stable of FBN Quest Research. It states that diversification away from oil has been the agenda of every government in Nigeria. Yes, it's not been a new discussion. It's been something that has always been brought to the front burner. But it has now been a slow process, and the COVID-19 pandemic has even addressed or worsened the issue in terms of that prospect. So what is FBN Quest Research looking at in terms of this challenge? With COVID-19 pandemic, it has really affected that prospect, and it's shown that the federal government is vulnerable to the Achilles heel as previous administrations. Oil and gas, according to the research, provides a greater part of the both federal government and merchandise export earnings. These realities have spawned an academic debate as to whether a crashing oil price leads to recession in Nigeria in the way night follows day. According to one school of thought, the pandemic is a positive for the movement of halt or slow climate change and a negative for the fossil fuel industry. So if the FGM bought wholeheartedly into this narrative, it will surely push far harder on diversification, which is it. We are seeing those signs. So the story in the view, however, is more complicated. Big oil has been bruised by the pandemic, and I will give you further insights into that, but it's not in retreat. So we're off the floor and have moved 4 months on from the point in early April when shippers of the U.S. Western Texas Intermediate had to pay to be rid of their cargoes. The three giants in oil services, Baker Hughes, Halliburton, and Schlumberger, have announced write-downs totaling $45 billion. That's a record write-down in the past 12 months. The majors have not been spared. Ahead of its results for Q2 2020, Royal Dutch Shell guided to a cut in the valuation of its assets of up to $22 billion. British Petroleum reported on 4th of August halved its dividend and confirmed write-downs of $17.5 billion. Within this objective of net zero emissions by 2050, it has now pledged to reduce its oil and gas production by 40% in the coming decade. These write-downs are exercises in kitchen sinking from the view of FBN Quest research. Global demand for crude has picked up in recent weeks, led by China, running at 100 million barrels per day. In January, it hit a low of about 70 million barrels per day. In April, the Paris-based International Energy Agency currently forecasts that there will be 92 million barrels per day this year in terms of demand and an average of 98 million barrels per day in 2021. The oil majors have become leaner, more selective in their spending on exploration, and more aware of the thinking of institutional investors. The European operators are more aligned with the ESG, environment, social and governance values, than their US and state-owned Asian counterparts, as they all reposition themselves in COVID-19 life. Frontier areas such as Kenya and Uganda are losers now. On the other hand, Italy's Eni oil company, for example, is to focus on its existing production fields such as Angola and Egypt. The collapse in the crude oil price in March-April, engineered by Saudi Arabia and Russia, dealt a major blow that brought a sequence of write-downs and bankruptcies. There was a pickup in production last month, but given the nature of the shale industry stemming from the US, the indicator to track its drilling numbers, more than 14,000 wells, were drilled in the US in 2019, and the best estimate for this year is already less than 7,000 wells. Let's go on to Saudi Aramco, a state oil giant, Saudi Arabia, one of the most profitable state oil-run firm in the world. Its profit plunged by 73% in the second quarter of 2020, showing you what's really happening in the oil and gas industry. A slump in energy demand and prices due to the coronavirus crisis hit sales for this company and, of course, the world's biggest oil exporter, which is Saudi Arabia. The company is now stuck with plans to pay $75 billion in dividend this year. And CEO Amin Nasser said global oil demand is just recovering. This is the same story with all major oil companies that have taken a hit in the second quarter, as we've been reporting, as lockdowns to contain the coronavirus limited travel, which reduced oil consumption and sent prices tumbling to levels not seen in nearly 2 decades. Aramco is listed in the Riyadh exchange and, of course, in a record $29.4 billion flotation, said the rapid spread of COVID-19 globally had significantly reduced demand for crude oil, natural gas, and petroleum. Mr. Nasser told reporters that he had seen a partial recovery in energy markets and a pickup in demand as economies gradually opened after the easing of coronavirus lockdowns. According to him, look at China. The gasoline and diesel demand is almost at pre-COVID-19 levels. We are seeing that Asia is picking up and other markets too. He also discussed the plans of the company to strengthen its operations and also ensure that it manages the lockdown easing experience. He says as countries ease the lockdown, we expect demand to increase, an optimistic Nasser said. He re-emphasized the fact that they intend to pay the $75 billion dividend subject to board approval and market conditions. The group's dividends play a critical role in helping the Saudi government to manage its fiscal deficits. Aramco reported a 73.4% fall in second quarter net profit, a steeper drop than even analysts could forecast, and said its expected capital expenditure for 2020 to be at lower end of $25 billion to $30 billion range. Now let's look at one of the big deals that Saudi Aramco has been chasing. Saudi Aramco is still working on a deal to buy a $15 billion stake in Reliance Industries, which has now overtaken ExxonMobil as the second largest oil and gas company in the world. Reliance Industries is owned by Indian billionaire Mukesh Ambani. So they are seeking to buy the $15 billion stake in Reliance Industries refining and chemical business, even as lower oil prices forces it to slash investment spending. Reliance shares fell in mid-July after Chairman Mukesh Ambani said a transaction had been delayed due to unforeseen circumstances in the energy market and the COVID-19 situation. A deal with Reliance would help the world's biggest crude exporter join the ranks of top oil refiners and chemical makers. State-owned Aramco is already a major supplier of crude to India, while Reliance sells petroleum products, including gasoline, to the Saudi Arabian kingdom. talk about the impact of the COVID-19 pandemic on the oil and gas industry, and I'll tell you one very, very adverse impact it has. And that's the fact that the U.S. oil and gas services industry has lost 9,000 jobs already. Roughneck job cuts accelerated in July, and the outlook may worsen as new COVID-19 cases stifle economic activity in the U.S. The Petroleum Equipment Service Association has already reported that the sector shared 9,244 jobs last month, a 43% increase from June's losses. The industry-funded trade group said in a report released earlier this week that pushed the industry's total job casualties since the pandemic emerged to 99,253. That's the total amount of jobs that have been cut since the pandemic, a record hit, if you ask me. Texas, Louisiana, Oklahoma, Colorado, and New Mexico are the hardest hit regions for oilfield cut job cuts, according to the report, which crunched the U.S. Bureau of Labor Statistics data with the help from University of Houston's Hobby School of Public Affairs. Oilfield employment in American fields, which hasn't been this low since March 2017. That's from the U.S., showing you how oil and gas jobs are being affected massively in this period. Let's move on to some other updates in this program. I mean, when you hear those kind of jobs going, you really, really think, when will the oil and gas industry pick up, and when will people begin to have a big smile again in terms of investment activities? But I want to look at the concerns for the global oil and gas industry. The first, of course, that comes to mind is the fact that the crude oil price shocks and volatility will continue to create some challenge for the industry in terms of forecast for investments and activities. The second is that the vulnerability of economies like Nigeria that are over-reliant on crude oil for revenues will still suffice. The massive job cuts, like I just told you earlier, about over 9,000 jobs last month lost in the U.S. oil service industry, totaling 99,000 jobs in just one country, is just the characteristics of what is happening to the oil and gas industry as a result of the COVID-19 pandemic, and the unprecedented revenue losses for key oil and gas players, British Petroleum, ExxonMobil, Chevron, Schlumberger. All those are having great impact on the oil and gas industry. But let's look at Nigeria. What are the key issues for Nigeria? It's imperative. It's imperative that Nigeria signs the Petroleum Industry Bill. The 9th Assembly, chaired by Senator Ahmed Lawan, Senate President of Nigeria, has assured that they will put this at the front burner. We hope they will put action to their words, and the President, when that bill is before him, will sign it. The need to bring the big state oil and gas companies like NNPC, Nigeria Liquefied Natural Gas, to the Nigerian capital market is long overdue. We need to bring such companies to the Nigerian capital market to drive transparency and to deepen the market and open it up for corporate governance and deeper activities for retail and other aspects of investors in the country. And then driving transparency and accountability in the management of activities, particularly in the Niger Delta region, a region that produces and provides over 80% of oil and gas revenues in the country. But yet, when you look at the funding level, infrastructure and human capital development is still backwards. No significant infrastructure to show for being the treasure base of the nation. That has to change. At least the East-West Road is not bad enough for Niger Delta. Then the effective management of the fuel subsidy removal regime and implications for Nigerians, because as the NNPC and the Ministry of Petroleum and Resources look at removal of fuel subsidy, it's going to have its impact on Nigerians, particularly at a time where people are losing jobs and there are pay cuts in terms of paying for more, in terms of PMS, that's fuel, in terms of transportation costs, amongst others, in terms of price of goods and services. How the fuel subsidy is managed this period is very critical for Nigeria. And then they need to deepen our gas strategy and industrialization to create jobs and increase revenue for the nation. That is already in the works, and we hope that will be strengthened. And of course, encouraging local content development in the Nigerian oil and gas industry. As you said earlier, the NCDMB is coming on board. Its headquarters is going to be commissioned this week. We want to see more things happening in that space. But finally, and most importantly for me, transparency in the competitive bidding process for the 57 oil fields, which the President has brought out. We want to see transparency in the whole process, knowing who has which oil field and how corporate governance standards is very important for our oil and gas industry. And it's been very, very interesting. I mean, who would have thought about the fact that the oil and gas industry, lucrative industry, where a lot of people like to work, will go through this kind of hard-hit situation amidst the COVID-19 pandemic. But that's how it is, and that is why industry players must continue to think of innovation, to think of how to create value, to think of resilience, and in terms of technology also. Let's look at the oil-producing, exporting countries, some updates that will be of interest to oil and gas analysts and stakeholders, and even the populace. According to OPEC, in the world oil demand for the year 2019, here is how the products played out. Now, the other petroleum products accounted for 30% of all the entire world oil demand for 2019. And then distillates accounted for 28% in terms of world oil demand for 2019. Gasoline accounted for 27% of world oil demand, while kerosene accounted for 8%. Residuals, which is part of the oil petroleum products, accounted for 7% of total world oil demand in 2019. Let's look at OPEC's share of proven crude reserves across the globe. It remained relatively steady at 79% in recent years. That shows that so far, out of 100%, OPEC accounts for 79% of the proven crude reserves across the globe. And in terms of the world proven crude oil reserves, it stood at 1.5 trillion barrels at the end of 2019. And OPEC and its members are controlling 1.2 trillion barrels of that. That shows you why OPEC and even OPEC Plus, their meetings are very critical, because the Dr. Mohammed Bakindo-led organization, every time they meet and discuss, you now know why their decisions have great impact on the global oil and gas industry and the price and production levels. They have impact because of the fact that OPEC controls 79% in terms of reserves operations and 1.2 trillion barrels. So if you control that, definitely whatever you discuss or whatever you say as statements must be taken seriously in the industry. And that is why in days like this, every Tuesday, we'll be looking at the oil and gas industry, amongst other industries, developments there, because it's very critical to the economy. And so we emphasize the fact that in this period, there is clear need for transparency and accountability, because these are two areas that has been a challenge for the Nigerian oil and gas industry. There's been clarion calls over the years for the Nigerian National Petroleum Corporation to come out clearly with its financials. We've seen some of those aspects this year, but we call for more of that in terms of coordination, and that is why that was raised earlier, that coming to the capital markets would be a big one. Privatization, liberalization to the capital market would be a big one. And a big example is Saudi Aramco. Saudi Aramco is one of the most capitalized companies in the world because it has opened up to be part of the market. It's been liberalized to be part of the market. And you can't be in the market and not embrace corporate governance. You can't be in the market and not be understood in terms of your operations and how you work. And so we believe Nigeria can play big, like the likes of Saudi Aramco, if it takes that huge step of opening up the scope of the operations of the state oil company for the markets. And I believe that will be a game changer for the Nigerian capital markets. It has also been a challenging period for oil and gas companies in Nigeria. We saw the Seplat second quarter 2020 results of losses. And we're seeing even more from oil companies like Total in operations and amongst others. This calls again for innovation, calls for new thinking and remodeling of strategies for oil and gas companies. But most importantly, across oil-producing countries, it calls for a very strong approach to tackling corruption. Think about any nation that you can imagine that has so much abundance of oil and gas resources, but is poor or facing huge economic crisis. You think about Venezuela. Venezuela has the president by name Nicolas Maduro. But today, if you look at Venezuela's case, it is very, very pathetic. The crisis, the austerity, the citizens going through challenging times, despite the fact that Venezuela is an oil-producing country. So you can have oil and gas reserves, huge, but if you don't have effective governance, transparency, and accountability, all that will go to the mods. Because why? A few clientele will control the resources, amass wealth, buy houses, big cars, assets, things for their family, but millions of people will be living in poverty. And that is again comes to Nigeria. Why should Nigeria be having over 80 million people living in poverty when it is one of the largest producers and exporters of crude oil? It therefore brings to the fore the fact that even if you're a resource-blessed nation, without proper governance, without transparency and accountability, you will be seen and you will experience poverty. We have a great chance as a nation to amend our ways and reorder our priorities, because when this continues as a trend, it could fuel social crisis. And several leaders have warned about this. We don't want to get to this level. And that's why we once again implore the administration of President Muhammadu Buhari to strengthen the institutions, to continue that step in anti-corruption and ensuring that those who violate the principles and are found wanting are brought to book. When we see people that have stolen or looted funds meant for the people, particularly in the petroleum industry, brought to book, others will sit up and know that government means business. And that will be a wrap for the Economy and Politics show for today. Please send your comments and views on this edition to news@proshareng.com, or you can join our website www.proshareng.com to watch our videos, read our news reports and analysis. It has been an interesting day discussing the oil and gas developments. You can always tag us in conversation at #AskWebTV or #oilandgas for conversations around the petroleum industry. 10 a.m. we'll continue a conversation on the market review where we look at financial and capital markets as it relates to the economy. To become your way again in whatever political, economic debate and conversation you engage in, please make sure it's constructive and productive. Thank you for watching. Have a nice time and stay safe.